All right, okay. As the clock, 4 seconds there, three. All right, the webinar is live. All right, let's just give you guys a couple of minutes just to get in here, and then I want to sort of kick. It's something that it's probably been building up for some time. And it is more of a mentoring session. I'm not, but it's something that I've seen a lot of you traders sort of missing, and it's actually the bridge between trading psychology as such and the real market, right? So let me just see what's going on here, make sure everyone's there. All right, so if you guys are good to go, I mean, most of our traders are probably going to be looking at the replay anyway. So let me just give you a bit of give you a look at the beard. The beard is coming along. I'm just out of the farm. See if I can actually get that on. Okay, so I've just got, as you can see, I'm going to my daughter's 21st tomorrow night, and I'm going as a lumberjack. So I've got the beard decked out, just the back office of the farm, and coming to you live and clear. And I'm sorry about the videos of late, but I have got actually a better meeting one, which I wanted to use today for this, and just getting around doing other things. I actually logged into that thinking this was it, but I had the wrong service. So here we are. We'll use this, one for not really the last times, but there are better systems that we can use, and we'll definitely use them. All right, so let's just kick this thing off. Let me come back to the screens. Now, what I want to do is, as I said, this is a real bridge between getting you guys sort of really tuned up. Now, if you're looking at the trading psychology videos and these sorts of things, and Mark, I know you've looked at a lot of different reading books and those sorts of things. It's really good to get dark and deep into your brain and your psyche, why you keep sort of freaking yourself out, or why you keep changing things and all this sort of stuff. But when it comes down to it, right, there's only so much you can read and do. And then what happens is you need to actually come back to the market and bring that psychology into what's in front of you. Now, one of the key things is, now, managing yourself. Now, there's three different parts here I want to cover. Managing yourself, managing the game, and then managing your P&L. It's actually probably easier for me, actually. Just if I just sort of talk to you a bit about this first, then we'll come back to the market. So basically, the first part, right? Now, I've been actually very busy sort of organising a whole range of different sort of changes and structure and all these sorts of things, really focusing our business on developing traders and proper traders, not like the runaway stuff that you see out there. So what I want to do is actually sort of start to spend a bit more time in developing your skills, developing your mental edge, right? And that comes from your skills generally and your experience. Now, if you haven't been trading at all, if you haven't had any sort of fear experiences, as you go, I saw something the other day, as you go past, I think it's like 8 years of age, that's when they start to sort of build all the fear into you, okay? Fear of getting, pinched down the road by someone throwing you in the back of the car, getting hurt, run over by cars, all sorts of things, right? So from that age, you start to develop a real natural affiliation to fear. Now, that generally comes, though, with a lack of understanding of what you're actually doing. So if you don't understand what you're doing and you're not confident with the knowledge you have about what you're doing, then that's when the fear comes into play. If you've played any sports and you've been successful in business, well then, you've got to understand you have what it takes. You've got the edge. You're already successful. And you can take anything out of the sporting arena or anything out of business and bring it to the trading table, and it will work for you. I think Steve as well, coming from a disciplined military background where you are undertaking massive tasks, with uncertain outcomes. I mean, that's probably the absolute end of the fear spectrum. If you can handle that, you can handle anything. So what we want to do is really look at what you're doing with yourself, managing yourself. You're a trader. You're a professional trader that is hitting the market live with your own cash. Now, that takes a certain amount of dedication and commitment. But what I've noticed, as I said, I've sort of been building out a lot of our stuff, and I've been rather busy and haven't been able to give you as much time as I'd like. And that's going to change very quickly to more sort of information, more stuff like this to really sort of develop you guys is I've noticed a lot of people sort of just hanging in the trade zone, right? You find me, I mean, sometimes, if I'm doing things and I'm available, I'll get in there and have some chat and do some things and see what's going on. If I'm trading or if I'm looking at the markets, I'll post charts and I'll tell you what this and that and what I think and all these sorts of things. But my main job is really, as a guide, is to get you guys tuned up for each trading day. And that's what I've been focusing on. Now the other part is get you into the frame. Like, that's just a static moment in time. It's a snapshot. And I can actually tell you exactly what's happening in that snapshot. But then what you guys need to do is manage yourself, manage the game and your P&L, right? This is what it's all about. It's about tying your knowledge, your understanding, and start to narrow your focus, right? There's a lot of guys, as I said, spending too much time in the trade zone. And for me, what that probably means is guys spending too much time in front of the screens, waiting for something to happen, right? And that's a terrible way to be trading. It's an actual terrible way to do any business. You've got to remain fresh. You should be looking to include exercise into your regime, right? Make sure you're not spending much time. Make sure when you come back to the computer screens that you are at your best. And I can tell you, after 8 hours, or after 1 hour for that matter, but definitely after 8 hours, you are not going to be thinking clearly. You are going to be watching price action, and you will start to bend your trade plan upside down and have it bending around corners when it should be very precise. Right now, there's a certain situation today, like a market setup that I identified. It just sort of stood out to me like a sore thumb. And if you guys have finally got around to reading, having a look at the daily rundown for the 17th of May, you'll understand what I'm talking about. Right. So, but these skills are only going to come to you with experience. I can train you how to trade technically and fundamentally and execute and these sorts of things. Where I'm going to add more value with my experience now is actually giving you insight into those sorts of snippets, which is a moving, dynamic market. But what I need you guys to do is actually do your part. Manage yourself, okay? Make sure you're not dedicating more than half an hour at one particular time during the day to the markets. Now, if there's US numbers coming out, I get in front of the screens, if you're lucky, 5 minutes beforehand. I don't need to get in there earlier than that because I already know what I'm doing. So you've got to prepare yourself. This is, we talk about this a lot. This is what the Trade Zone and the daily analysis, MyFX Trading Hub, that's what it's all about. Even the next best trade list, watch list. I'm very conscious about not overloading that because I think if you do, you won't learn what you're doing. You'll just copy the trades. Okay, and like all traders, we will, and I really sort of isolate those trades. So that's why there's not so many because I'm posting other trades in the trade zone, in the real trade area there on the trade zone, because they're just sort of short-term trades. Okay, now we've gone through a period of market activity where those short-term trades were hugely abundant. Right, there was larger stuff because Trump, geopolitical events. It's an absolute mess. But now you can actually sort of see what can happen when the markets are normal and you start to see economies kick into gear like the US has. Okay, and that coincided with the wheels completely falling off the UK. And then we've got a quick 1-2. Sterling's down 800 points. There's cash all over the place. The dollar's going up. And we've got trading opportunities. And that's where your patience, discipline, and control really come into play. All right, so managing yourself, just to recap, you've got to stay fresh. If anything, you've got to be doing exercise, some sort of exercise, sitting in front of the screens or watching telly for that matter, whatever you're doing. Just get outside and get some fresh air. I go surfing, I go bike riding. I'm out there doing all sorts of things. So you need to do that. And don't sort of, as I said, just don't let the market determine your lifestyle. Okay, this will become a very miserable experience for you if you do that, regardless of how much money you make. I tell you, money doesn't make everything sort of go around, pays bills and gives you a lifestyle. But if you don't respect it, you respect yourself, it will go pear-shaped. Now, sort of managing the game. So one thing that I want to sort of really sort of talk about is actually managing market dynamics. Okay, so this is where I'll sort of come back into the screens a bit because I want to sort of show you just to really fine tune. Let's start on the major currency pairs, right? Just to start with. Now, you've got to really, managing the business of foreign exchange And this goes, I was just writing an article on FX Street. Now, I'm not even sure if it'll get published because I was having a bit of a crack at a lot of the gimmicks out there. Okay, there's so many things talking about, okay, the 5 steps to this, the 10 top secrets for this, the 4 must-haves. I'm like, can you give me a break? Okay, now what you guys need to do is, this is part of your trade plan and part of your focus each day. We look at the major currency pairs, right? Because they're the major, that's where the major volume is, and that's where there's structured trading around the trend lines and all that sort of stuff. What we need to do is really narrow your focus. Okay, you need to focus not on everything that's going on. You can't possibly cover every possible thing that's going around. So what you can do is, though, you can actually focus on the pairs that, that are looking pretty good. Now, I've already adjusted these trend lines to the recent moves, okay, the moves in Asia. And that's exactly what the traders in the UK would have done. So what you need to do is actually fine-tune your charts and then start to focus on the pairs that have an absolute understanding that you feel confident and comfortable with. Now, this will come back down to your overall performance as well. Now, if you have a very good performance against the Kiwi, well, that's the currency you should be going to. Historically, I'd say I've probably made more money out of the Aussie than most. But you know what? It's given me hardly anything the last 6 or 8, 9 months. So I've sort of been making a lot more money on euros, sterling, even the Swissy and bits and pieces here and there. So like the crosses. So you've got to sort of fine tune what is your, where do you fit into this and what actually works for you. All right. So that's one of the things. So, and then the other part is, when you're looking at, and I've got, say, the text here, there's a picture of me out there surfing down the road. That's what you guys should be doing, getting a little bit of surfing. Is I have this is what I use for the daily analysis snapshot. So what I do each day, and this is a really good thing for you to be doing, for you guys that have been members for some time, you would have remembered each currency pair had its own analysis page and stuff. It was actually doing my heading, because all I was doing was replicating and giving you static activity. Now, when I look at the majors, right, or if I'm looking at the major currency pairs, I'm looking at 4 different time frames here. So I'm looking at the hourly. Actually, let me just get up my little magic pen, and then I can actually show you what I'm sort of talking about. So you got the hourly, the daily, the weekly, and the monthly. Now, the monthly's there just because I needed 4 charts. But if you're looking at these different things, it gives you a good sort of snapshot of what's going on. Now, you want to do this as quickly and effective as possible. The more you look at these charts, the more you'll start to sort of think you're seeing something different. Like, oh, gee, that one looks a bit different. I'll change my mind on that. It's a very quick process. And this is one of the reasons why we have a tool like Reuters Zenith is isolating the best pair. Now, I'm like, okay, well, euro's going down. It's a little bit of sideways here recently. I'm still looking to sell here. It's so easy to see what's going on. Daily, it's down. Weekly, it's down. I guess monthly, it's sort of sideways. So I would go back into it and go, okay, well, a bit of sideways activities in the hourlies, but daily and weekly's down. Overall, this is going down. Right? Don't make it harder than it needs to be. You don't need to think about anything else outside of that. So then you come through the major pairs and go through the same process. So once again, I would sort of generally leave the hourlies, just leave it as it is, so you can see what's going on. See how the sterling hourlies here, it's an actual dog's breakfast. Like sterling's gone from being a great trend to an absolute dog's bollocks, as I just said. Basically, on the daily and weeklies, it's going down. Right, so that's quite simple. There's a bit of sideways activity here on the dailies, but overall the trend is down on the daily and weeklies. We've seen how unreliable, I was going to say something else there, but unreliable news reports about Brexit, how they can impact. And that's more about how the market was set up today. And I sort of mentioned that in the earlier video. But one thing I'm just sort of trying to highlight to you is don't make your analysis harder than it needs to be. You should be going through this, and then you go through each of the major pairs, and you're like, okay, right, I can see what's going on here. So this is where you're sort of doing a lot of your analysis. I come back into the major chart here, and what I'm really looking for, this is where I sort of just follow the currencies on a daily basis, as in I want to see where the price action is. So I generally blow these things up and actually have them there, so I know exactly where the trend line is. I don't need to know where the history is because I've already seen that on the other charts, and I've already seen it here. So you can actually make it easier for yourself. So as I said, narrow your focus, and this is going to help you manage yourself and then help you manage the game. All right. So now the other major part of this whole webinar. Actually, let me just come back to that. I can find that screen. All right. Now, this is the other major part to actually where you're bringing it all in together. Now, you've heard about the month-end fix. Now, it used to be a massive event each month in the market itself, probably not externally. So one of the things that all the LIBOR and fixing and people setting rates and all this sort of stuff. There's quite a lot of guys. There was a team of 4 guys called the Cartel. Some of them based in London, some of them in New York, who used to talk to each other and actually sort of just have a bit of market chat. 3 of those guys I personally trained, and they were trained to actually do that, right? So it's like warfare. So, and I've actually spoken to each of them. I'm very good friends with all of them. They've gone through an absolute terrible situation where they can't get jobs anymore. They've been blacklisted across the globe. And what were they doing? They were doing what every trader in every bank was doing, especially the big ones. And basically, all you're doing is you might have a mate at Deutsche Bank or JP Morgan. You ring them up and say, listen, this is just covering of portfolios. So you might have, I've got to cover like $600 million yen today. I'm a buyer. Have you got anything? If you're like, well, yeah, hang on, I think we've got to sell 500. You go, okay, well, let's just match those off. And it has to be close to the market rate. You can't just make up rates. And you do the rate. There'll probably be a couple of points out of each for each of you. The bank makes 100 grand on both sides, and no one's the wiser. And it doesn't actually matter. It's just a reval rate. So, but anyway, that was blown out of proportion. But the month-end fix, there's actually a major part to that where fund managers are readjusting their portfolios based on performance, based on equity moves, where their exposure is and all those sorts of things. One thing that we used to see a lot of, and we had Citibank in the mid-90s, we were definitely the best and biggest, well, arguably the best, because I would say they're the best, but definitely the biggest and one of the top 3 trading teams in the world. And this is the London and New York team. And we used to work in cohorts, and I worked in both centers. So one of the things that we used to do is we used to have like Soros and all these massive funds come in and cover massive amounts with us out just whenever. And one of the things would be, say, for instance, you'd see a massive move in the bonds, right? So we've seen. Say one of the funds is massively short and they're getting absolutely hammered. They will close those positions out. And what they will do is, in one day, they will pull everything back in. And what that means is all the positions they've got across all portfolios, they will look at, say, they've just lost, $15 million on the bonds. They will go, well, we've got $3.5 million in cash in Forex. We'll take that. We've got some in the forwards, the derivatives, options. We'll pull it all in. And what that does is they're netting out the losses. They don't want the losses in the books. Right? It's bad for their reports. It's bad for everything. So what they do is they pull it all in and they square those losses up and they start again and they reassess the market and then they start to reallocate again. And this is what you need to do. Like playing the markets each day, you've got to go in with this sort of framework. And this is, I came from a very high level of sport background, so it was sort of natural for me. So each day is a new day. It's like running out for a rugby match or a soccer match or whichever. Hopefully you've played some sport and this will make some sense to you. Otherwise, if you've watched it, you can still sort of make some sense of it. But what this is, you're going out for a rugby match. You look at the markets, right? So you look at the charts and you think to yourself, okay, well, what do we got here? Okay, and I'm sort of looking at the charts, the ones we just looked at, and you're looking, well, we'll say, come back to this scenario this morning. I'm looking at Euro, Aussie, Sterling at the early stage, and even Kiwi. They're all in trends. But then you look at the game. Okay, what's happening to the game today? Right, there's 2 teams there. It's like the referee hasn't turned up, right? The data, where's all the data? Where's all the control here that used to, that would stop traders hitting the market because there's data coming up? Of course, we had the Aussie data. It was inconsequential. But then the rest of the time, traders are like, well, there's nothing coming out here. There's no referees. Let's start to push it around a bit. And they start breaking the rules a touch because they start buying and they start pushing these levels and start running stops. Now, that's something you can identify with a bit of experience. But what I want you to sort of think about is this is a game. So say, for instance, and I remember seeing in the trade zone at the time, I squared up sterling early, and I was trying to assess whether that news about Brexit was fresh. And I could see it had been out about an hour, and I was like, oh, shit, I'm actually short sterling here, right? I'm 9 points out of the game, out of the market. And I'm like, hang on, is this new? Let's have a look at the market setup. I'm looking at the market setup. I'm thinking, well, if this goes through that trend line at 20, it could pop. Now, it could. Now, I'm looking at this. There's no other data coming out. And I know this market situation because I've traded it, like 100 times, probably a lot more. And I've actually been one of the main instigators. I'll be like, well, hang on. If there's no one out there and there's stop losses here, this is the time we're going to drill. And it usually happens in the Asian session, right? That's when, especially on sterling, euro, and the other majors not associated with the Asian session, that's when it will happen. So what you need to do is, so look, for instance, Bobby, he was still short and it was sort of 20 points higher from where he got in. And he's like, well, I'm short. What do? Well, you got to make a decision. And this is where you guys have got to live by your decisions. And don't second guess yourself and don't beat yourself up if you get it wrong on the decision. I made a decision to buy it straight away. If it came straight back off, I wouldn't have cared, right? Because I made a choice on protecting the overall risk of the book. And then you think, well, it's only 9 points. I mean, I could make that up in 2 minutes and something else. So don't fall in love with your positions. But say for Bobby, it did pop. It took him out, right? So the situation is he's now got a loss in sterling, which was really come out of left field, out of a geopolitical sort of release out of a dodgy newspaper. Now, what do? Well, if I was Bobby and I had positions like, say, Kiwi, I was short Kiwi, I had a short euro position, and they were in the cash, what I would do straight away is take the cash, right? You're playing a game. The game was your main lead was sterling, right? That hasn't worked out for you. Don't go in for it looking to make a 100-meter kick into goal or try or whatever you want to do. Don't go for the Hail Mary looking to get the cash back. Manage your positions, manage your P&L. This is where it comes back down to understand the market, understanding yourself, understand the situation you're in. I rarely have big drawdowns because when I actually have a loss and I've got other positions going, I will start to tap them into the account. Tap that hole, fill the hole up. It's about recovery. Now, it's not about sort of taking loss off the table and cutting major positions that are running. Usually, if you've had a loss, the game has changed and you're out of whack with the market and you need to adjust. So that's what I'm saying is do not get fixated on your positions and actually look to repair the immediate damage, because what that does to you psychologically, it squares you up, right? You're good to go again and look for fresh opportunities. If you just take that hit and you sit there static, right, and you've got your other positions, and don't forget, when you made that decision on cable, you had these decisions on, say, euro and, say, Kiwi. They're probably all very similar. Now, if you just sit there static, like you could have done today, let me just come back to the screens. This is a good one to actually show you. Then, happening is you could end up having a situation where, you do get run over on, say, 4 or 3 or 4 pairs. I mean, if you look at where Kiwi was, it popped up higher here. We had obviously sterling going through 135.20. We had euro also popping above 118.08. The Aussie sort of popped up as well. But these 3 opportunities, you can actually end up getting run over. So what you need to do is manage the situation. So when you come back to thinking about the first thing I was talking about, manage yourself. If you're stale, if you've been in front of the screens for more than half an hour, you will not have the strength and the discipline to make those decisions and act, right? This is about, and I'm talking about a situation where the market has moved against you and you are no longer in control. And when you have losses, you will start to get a little bit weird, right? Okay, there's nothing worse than losing some cash. And what you want to do is get that cash in straight away. But as I say, you can micromanage yourself like a fund manager does. And what they do is exactly the same thing. If they suffer losses, and I'm talking like a decent hit, what they will do is they will pull all their cash back in, fill the account up, and reassess and start again. And and for us as independent traders, we can do it the next day, right? Don't go back in straight away. I mean, I rarely get involved in the market. If I've had a loss, I do not go back into that currency pair that day. I give myself one chance. If I can't get it right the first time, I do not deserve a second chance. And you've got to be hard on yourself with this. All right, so this is sort of tying it all in. So the game, managing the markets. So as I said, the more, and I understand, coming back into, when you first start trading, as I said, I was just sort of writing this article on FX Street. It's more having a crack at all the lunatics out there. But when you come back into the market itself, or when you start even with us, and what we end up finding is with a lot of guys that end up finally finding us, is that we have to sort of reprogram them because they've already sort of picked up a lot of bad habits. Now, I understand there's a very big list here of different things to do, right? What I would really suggest everyone does is actually go through each one and make sure you understand it. Concentrate or narrow your focus and concentrate on one thing at a time. Now, the currencies and the markets, okay, they're very simple and generic things just about the markets themselves, which will give you a bit of backbone. And you'll be surprising how much information that resurfaces down the track from those two parts. And most people sort of skim over that. The technical side of things is absolutely very important, that you make it as simple, quick, and effective as possible. Your job isn't to work out when you're doing your technicals, okay, which currency pair, is it going up or down? At that stage, you're drawing the trend lines. You're just drawing trend lines, right? Do not get caught into saying, okay, is that going up or down? Well, the data will tell us that, and the trends, right? That's why I have these technical things. This will tell us whether it's going up or down, right? We know that. So when you're just doing your general charts, make sure you are doing it quick and effectively. So then, okay, so then you bring the situation. So you narrow your focus. Okay, now if you are, the idea each day too, as I said, this is a fresh game. The idea each day is to potentially have a look and see if there's an opportunity to make money. It's not just to come to the market and you're going to make money. Is there an opportunity? If there is, your preparation, right, will give you the opportunity to make the cash. So don't just come to the market and go, I'm going to make money today. And I hope I'm going to make money every day, and I don't. But if you come to the market with the attitude of being, well, you know what, I think I might have I hope I can make some cash today, and you're relaxed about it, well, invariably what happens, you end up sort of coming back to it and going, holy crap. I sort of sit there sometimes, and I've had a few people sort of say to me like, hey, Brad, it's sort of like Wednesday. There's no next best trades. I'm like, yeah, I haven't actually seen anything that really stands out. I mean, I've probably done a few trades, but they're sort of short term, here, there, maybe on some data, bits and pieces and this and that. But, but when they do light up, and you guys may have actually seen this, all of a sudden I do have three. There's 3 or 4, sometimes 5 orders on the next best trade watch list, because that's when it's on and they click into place. It's like, there they are. Wow. Yeah, on. And some weeks there may not be any. But what you have to do is, so manage the mindset of yourself, manage the game, manage yourself, manage your P&L. Okay, as I said, if you're having a loss, don't go in there looking for a massive win. Your job is to get that cash back, and it's not by over trading, it's looking for the good opportunities. If there's none, just take the loss and that's it. If you've got 1 or 2 positions on, or 3, and you're in the cash on some, I would suggest reassess, put the cash in there and start again the next day. Look for the great opportunities, right? This is where they come from. So now, is this making sense? I should actually get told you guys that you can actually sort of plug in some questions here. I actually haven't even been looking at it. But one of the key parts is I just want to sort of connect with you and sort of show you there's a lot more to this than just posting a few things on the Trade Zone. And I'm very conscious of the work and efforts that everyone's sort of making. And I will sort of be endeavoring to really propel this forward, like grab you guys by the scruff of the neck and actually carry you down the track and go, come on, guys, this is where the cash is, and this is what we're going to do, and this is how tough you need to get. Now, one of the things that you do get out of working in a dealing room for many years, and as I said, I played a high level of sport, is you are just tough and aggressive. And some people would think an egomaniac, especially in the dealing rooms where you do have a lot of egomaniacs, but it's just confident. I'm confident that if I do the right outcomes, I have the right process, and I manage the game each day around my performance and what happens in the market, then I will be very successful. And that's where you guys need to get that mental edge. And it's not going to come by spending endless hours in front of the screens. Now, the good thing is that I like is there's a good level of camaraderie in the trade zone. Everyone's sort of chatting away and everyone's helping each other, and it's fantastic to see. But just don't get caught up in there just helping out just for nothing. If you've got nothing on and there's nothing happening, then turn your screens off and just say goodbye to everyone. But if there's something happening in the market and there's activity, and we do have situations where we have, say, early German data, Eurozone data, UK data, and it rolls into the US, you do have a big session. And then, by all means, stick around the computer, but try and keep yourself a little bit fresh by having a break. But, manage yourself. Don't get caught up in what everyone else is doing. Narrow your focus on what you're looking for. You're looking for a good trading opportunity, not just necessarily looking for cash. You're looking for the best trading opportunity for you. And now that may not be the same trade as what I've got, may not be the same trade as Mark or anyone else. And if you're not sure, just post it up there and we can all have a look. I've made some good cash out of trades that everyone else has posted. I'm like, geez, you guys are good. You guys know what you're doing. You just got to sort of hit it when you see it. And that's pretty much it. All right. So there wasn't a huge amount of things for me to actually go through on the charts, and it's not that. So this isn't that sort of webinar. I want this to be sort of more of a session where you can actually sit back and actually listen to what I'm saying and say, well, you know what? Am I doing some of these things correctly? Am I fresh in front of the markets? Am I doing my analysis as quickly and efficiently as I can? Now, this is one of the things I found over the years. A lot of guys, a lot of men actually, are either semi-retired or they're staying at home and their wives are working, these sorts of things, and they're under pressure because you're sitting at home and you're in front of the screens, and because your wife or partner expects you to actually have some sort of level of performance, that you've got to trade. Well, mate, re-educate your partner and say, listen, I'm a full-time trader. I trade when the markets are on. Now, and they come home and say, how many trades you do today? How'd you go? I didn't do a trade at all. The next day, didn't do a trade at all. What's going on? Like, well, there's nothing happening. So in actual fact, I'm making money because I'm not losing it, because that's it. And when the trades are good, I make money and that's it. So you've got to really have that understanding with yourself that not every day you are trading. You come to the market looking for opportunity. And then when you do your charts and you go through that trading process and you go through the MyFX Trading Hub and you'll see a bit of a process there, you look at the markets and go, is there anything on today? And I know there's usually some sort of bit of data out, and that can create an opportunity, but is there a really good opportunity? And that's where that daily analysis snapshot comes in, where you've got the fundamentals and the technicals working together, and that's where the opportunity is, and that's what you need to concentrate on. So then you can narrow your focus. Okay, I'm going to keep reminding you guys all the time from here on in. I want everyone to narrow their focus. So if you've got the technicals down pat, fantastic. Narrow your focus on the capital management. Right? Just focus on that to the point where you completely understand it dynamically and static. Okay, so get your capital management. When you've got that fully under control, then you can focus on the fundamentals. I think what a lot of people do, and this is out externally from Traders for Traders, is they read around the place. There's like, and this is from inexperienced people, mind you. They say, well, these are the 4 must-haves, the 10 best steps, the 7 secret list. And I'm like, oh my God, no wonder people out there are getting hammered, right? This is it's an absolute travesty. But you guys yourselves can take control. You've got, I don't want to sort of harp on the whole thing, but you've got great training behind you. I've developed it myself, I know that, but I came through the banks and I continually learned. What you should write on your computer, on a bit of paper, and stick it to your computer. This is what you need to be a successful trader. You need to be a learn-it-all, right? You need to be a learn-it-all. And this sort of sounds weird. What you don't want to be is a know-it-all. Know-it-alls don't learn anything. They stop learning. A learn-it-all comes to the market each day knowing that he could potentially learn something. And I think you guys probably learned something today about that situation where we've had trends, we've had a technical setup, and then there's all of a sudden it goes, there's no economic data. Holy shit. this is going to get loose. And it was loose, spot on. So that's a very good learning experience for you guys, and put it in the vault, because next time it happens, you can be telling me, hey, Brad, I think we've got one of those voodoo days where there's nothing out and this thing could pop, and you bang smack on. So that's where we want to get you to. I want to, as I said, I'm going to grab you guys by the scruff, whether you like or not, and pick you up and take you down the track and give you more experience, more insight, more sort of management of yourself, right? Keep you fresh. Now, I can be fresh. I can have a couple of losing trades in a week and go out of the week down. And I'm like, you know what? That sucked. But I'll be back next week and I'll go through the same process, come back to the market each day, looking for that opportunity. Is there opportunity today? And say there's data, there's no technical levels. Well, there might be a short opportunity, but it's only a small one. And I'll be like, well, that'll be enough. I'm putting some money in the account. Okay. And that's what I want you guys to start focusing on. All right. So now I know that wasn't, probably may not have been exactly what you're after, as far as, I've got plenty of time to show you guys charts and show you this and that. And I hope to really give you a bit more insight in each day, with a bit of a rundown. I'm going to try and keep those as short and sweet as possible. But, the more feedback you guys provide us with the daily rundown, with the market insight and everything else you get, the better we can develop the products for you. Now, and it's like one of those things. I need to see things. Like, I need to see market setups and things, and it will jot my memory and go, gee, this one here, this is what's going to happen. I can actually tell you. I mean, I've been doing this for 28 years. If I can't see something happening, well, then, I'm going mentally insane. This is all I've ever done, right? From the time I left university, they put me straight on the desk, and that's exactly where I stayed. And I know I traveled all over the place, but this is what I love doing, and it's what I can do really well, and I can call it very well, and hopefully I can get that message across to you guys. All right, chaps. Well, that's pretty much a bit of a wrap from me. I know you're probably sick of seeing my melon. Pretty good beard, eh? As I said, I'll have to shave it off after this weekend, and we'll get back into it. Okay, Ken actually has a bit of a question here. On the psychology side, do you petition off the more intense, time-consuming short-term trades from the long-term ones that you set and leave? Do you differentiate? Good question, Ken. Yes, you do. As I said, just the end there, right? So when you come back to the markets, you're looking for that opportunity, and you're looking at your charts, and you're like, well, you know what? Is there the charts don't have a really good setup? Like today they did. I mean, all we needed today, for instance, is that Aussie data, that rate, unemployment rate, to be good or better, and we would have all gone long, and Aussie would have actually popped about 60 points. It would have been an easy trade. The fact that we had a negative and a positive was enough to screw things up a bit. But yes, so say, for instance, we don't have any technical levels and we have some data, or, you've got something. When you do differentiate, and you've got to do this in your head before the opportunity, right? Short-term trades are different to long-term trades or longer-term trades. Like a structured trade where you've got the fundamental working with the technical, well, that's a trade you let go, let it run, okay? But a short-term trade, you've got to have in your head that this is a short-term trade, and you'll be squaring the position up over the course of the next 10 minutes to 3 or 4 hours, right? Don't fall in love with those positions. They are there for a purpose, and it's just to tap some cash in when you see a clear opportunity. So psychologically, you do need to actually, before you see the opportunity, and this is a part of your trade plan, you go, okay, well, I've got to, say, for instance, the Aussie today. If this comes out strong, I'm going to get long. Is there much in it? Well, no, the Aussie sentiment is pretty much sideways. This may go up a little bit or goes through. Yeah, I'll take some of those, and then you're out, right? You have that plan in your head. You don't have to this is where you can tweak your trade plan as well. I wouldn't go in the big position, but, if you're buying Aussie today above, as it broke sort of through 30, I mean, it got up into the mid 40s, which is a pretty lousy move. We'll just come back and have a look at that. Just having a look at this, because it's a really good point. When you see an opportunity like this, right, and then you're like, oh, okay, so if this goes through sort of 25, we might see it pop. Sterling had already popped. Kiwi was sort of going as well. I mean, it went up just about 20. What is that? 20 or 22 points. So there's not much in it. I didn't even get involved in it. But you're thinking, okay, well, this pops. We could see a quick 20 points, right? This is a very short-term trade, and you would not be messing around with this too much. You might sort of just get long. It goes up 15 or 20 points. You know, you're not looking for it to top out or whatever it is. You're just going, you know what, I'm out. And you might be looking at another currency pair to determine that trade. And then psychologically, you're like, well, that's okay. Well, that worked. That's nice. I had a bit of momentum, and that's what you're sort of looking for. And then you're out of the trade. And you're like, well, okay, let's get back to sort of sensibility here. Let's get back to normal markets. Let's get back to the trade plan. Is there anything else? And you might come across and find some, you know, some European data that sort of gives the euro a bit of edge. But if it's not top tier, right, then it's probably not going to follow through. So it's once again, it's just probably a short-term trade. No, Ken, no, not all economic data. So Ken's question there is, so really an economic release trades are short-term. No, they're not at all. No. So if you've got a good technical setup, and say it's a big top-tier number and it's variant, well, that is a potential trend change. I like to say a CPI number or something like that. No, these can turn into actually very long-term trades. So don't think each economic data release is a short-term opportunity. They are not. What they are is they are break trades because the currency is breaking one way or the other. Now, if you have technicals either side of that, well, then that's where it can get really funky. Or if it's going with very clear trending sentiment, once again, you may not have a level on the downside, but it's going with the trend, and that's going to be a longer-term trade as well. Yeah, that's right. Mark's got a comment there. Love it. Re-educate your partner. Definitely, it's very important. If you have a partner, otherwise I'll leave you. Tell them what you're doing and how the market works. Not every day is a trade day. Just because you're sitting at home doesn't mean you're trading. Okay, so I mean, I've been dealing with that for many years. So it's, you know, just and educate. If you've got kids as well, educate them because they do not generally care about anything you're doing. All right. Everett, so g'day, Everett. New to traders, when you are in a profitable trade but a big news item is coming up, do you have to exit the trade? It's very smart to, Everett, because when you've actually got, say, major economic data releases, and we don't have any sort of coming up today, but now we will have tomorrow. So let me just give you an example of what's going to happen tomorrow. You definitely would. And this is what we always did this in the banks. Unless you had a massive long-term position and you were like 200 points in the cash, you would definitely square up. Now, as I mentioned, it's a good example. CPI numbers are the number one thing central banks look at. It's inflation. It's their, you know, historically, they raise and lower rates around an inflation band, right? So if it gets like 2 to 3% was the band. If it gets above 3%, they raise rates. If it's below 2, they cut rates. It was very simple. You know, it was old textbook stuff. What they've had to deal with is obviously catastrophic market conditions, but these CPI numbers. So imagine, like, this has got such a massive potential where you get really strong numbers here. Okay, it means the Bank of Canada may have to raise rates. We get really weak numbers. They're probably talking about, well, not raising rates, but they go neutral. So it's a big policy change. This is a policy change rate. If you go into that situation here on dollar CAD, say long, you've actually you're going into a casino and guessing, and you're hoping. You're like, come on, red or black, red or black. Man, this is trading. We don't guess. We actually trade. So that, like, it's not even the smart thing to do. We put in the rules of engagement for the funded trader program because this is actually what you do in the banks, and they make you do it. People before big releases, the managers. You know, I used to be the chief dealer of like 20 to 30 guys. Like, they're all lunatics. And I'll be saying, make sure you square before these big numbers because it's going to get loose. And when it gets loose, there's like generally to say the top 7 or 8 guys are managing the major currency pairs. So say there's 20 of them have all got positions, say on euro. When the news comes out, there's only one guy in the whole joint that's allowed to transact. And that's the trader that manages the euro. If you've got a position, you've got to yell out to him, mate, can you sell me 20? I can tell you what, there's 200 sales guys there, and every phone will be ringing. They'll have fund managers ringing up going, I want to sell 200, I want to sell 300. Do you know where the traders come in, the other traders on the team? They come at the back. So no one runs into these things with positions. And same with our program profile and our funded trader program. You do not run into these events with big positions or any positions for that matter, because this is where the most risk will be. okay, after the event, and usually probably the day after is probably the best opportunity. But those, and in this situation here as well, obviously guys who have been members for a while will understand there's two major variables here. You've got retail sales and the inflation numbers, right? And the other thing that central banks have been doing, we've got the inflation numbers, and the RBA's been doing this, and a few of the others, they're starting to bring out their own numbers. I mean, give me a break. It's like, well, get rid of one of them, because we don't need to see both. And then the market could be hitting these ones, and then the Bank of Canada ones are different. Then you got retail sales up in the air. It's such a lottery that you would not put the capital at risk. Now, what can happen is you could guess and get it correct, but the market volatility around those events, it may shoot up, take you out, and then keep going down. And you're short, and you're like, well, what happened there? I was actually short. Yeah, it's just volatility around the event. Liquidity pulls out of the market. The markets get thin. They jump up and down. If there's any sort of variance in both of them, say one up, one down, all you're going to left with is a smirk on your face and less cash in your account. So that gives you a reason why we actually we do make sure that everyone's square before those big major releases. That's, to me, it's just like that's where it is. And we've had a lot of guys actually sort of apply for the Funded Trader program going, mate, I'm not going to do it because I like to have positions into those numbers. I'm like, yeah, right. Yeah, do it with your own money, mate, because that is insane. And you know why they're applying for the Funded Trader program? Because they don't have any money, because they've been doing that, right? It's actually quite crazy, but there's a lot of weirdness out there. All right, guys. Well, that's a bit of a wrap from me. And as I said, I really wanted to give you this last week because it's sort of really important. I can see people sort of struggling a bit in the trade zone with regards, I'm having a few losses here, a few there. It's like, you know what? If you've had a loss, get the cash in the account, reboot yourself, refocus. There's a new game tomorrow. This is like, I mean, we've got one massive trading day, right? So it opens Monday morning in Sydney, closes in New York on Friday. It's a massive game. But we can come in and treat each day like a new game, a new focus. What's happening today is their potential. Always going with that attitude. If you come into the market going, I'm going to make money today, it's like, well, forget that, because you're already distracted. You're looking for potential. And what that does is it gives you a relaxed frame of mind to look at your charts, look at the data, match them up. Hey, I've got a real good opportunity here. Let them come to you. Don't go and force the trades. All right? And that's it. So if you can manage yourself, keep yourself fresh, relaxed, ready to go, and then also manage the game. Like, make sure your analysis is fine-tuned. Make sure you're not spending a lot of time in front of the screens. Make sure you know where the trends are coming from and what's actually moving the currencies around. Then you can start managing a P&L. And when you manage a P&L, actually, this is one thing I didn't mention. Once you, like, for instance, say you've actually had a couple of really good trades, right? Well, this is a chance for you, and you see another real good one. When you're hot, right? And I'm not talking about really leveraging up, but actually using some of that cash you've made. If you are in a draw-up situation, make sure you do increase your trade size for that next opportunity, especially when you are going on a run. Because I tell you what, when you're having a really good week and the weekend comes, you'll be extremely pissed off. I know I am, because when I don't want the week to finish when I'm making money. And he's like, oh mate, this is so awesome. And that's what you need to sort of get yourself prepared for and that situation. Remember I was saying at the start of the week, if you had seen the week ahead, I could see this week being really good because we had that retail sales data on Tuesday, and you think, well, this is good. We're going to have direction of the US dollar early, where usually that comes at the very last day or halfway through the last trading day of the week, and that sort of sucks because you lose that momentum at the end of the week. So anyway, the idea is I just want to sort of tune into your melon, give you a bit of guidance around getting more professional, having a more stoic approach to your structure of what you do, how you read the market, and then how you trade and how you manage yourself around your performance. Okay, if you're winning, increase your trade size. If you're going to that draw up phase, don't sort of hold yourself back. If you're having a couple of losses here and there on a day, tap the cash in, put that cash back in the account. Make sure those holes aren't big. I can tell you it will refresh you for the next day. All right. And then you have an opportunity. You see a good one, let it run. Manage the short-term stuff as well. All right. No more questions. All right, guys. That's really good. As I said, this will I'll intensify things as we go forward from here. Any feedback you get on the Market Insight or these videos, give us some feedback. We can always sort of fine tune things and go from there. We'll have some more surveys as we go forward as well, and I'll really sort of fine tune your focus. Okay, really getting you guys to focus on the one thing that really makes you cash. Isolate it. Okay, whether it's your capital management, your technicals, your fundamentals, your execution, whatever it is, let's fine tune. Get rid of all the crap that is actually corrupting your head and polluting your head, and just focus on the clear stuff where the opportunities are, and that's where the cash will come from. All right, guys. Thanks for joining us, and we'll catch you later on. Cheerio.